Hi, I'm Chris Denning, a Corporate International Tax Partner at MHA, and this short video is about the corporation tax issues that came out of the autumn statement.
Hi, and I'm Steve Hayward, Associate Tax Director based in the Corporation Tax team.
So, Steve, obviously the key flagship announcement was the extension of the fully expensing to become a permanent measure. So what's your initial view on that?
So yeah, this is an extension and not actually something new. It was already scheduled to last until end of March 2026, covering sort of investment in plant and machinery and equipment and that kind of thing, offering full deduction against tax for investments made by companies. What I think this does is provide additional certainty for large businesses who often will think about investment timescales over several years in terms of planning their capital expenditure. And this gives them more certainty that they can plan that for the future and carry on with those and even scale up those investment projects, knowing that they'll get a full tax deduction.
Yeah, and I think it was important that the opposition came out in support of that measure to give that certainty, and that confidence the business will have that measure will be there post a possible change in government.
Absolutely, yeah, because this is about providing certainty to businesses, and with an election at most slightly over a year away, the fact that Rachel Reeves, the Shadow Chancellor, came out and said that she was in favour of this just adds to that sort of certainty, which is great.
I guess the other interesting aspect of it was that it was announced as a tax cut, the biggest tax cut in history, I think was the phrase used, when in reality it's effectively a timing issue rather than a tax cut. Would you agree?
Absolutely, yeah, because capital allowances, what was already in place is a writing down allowance system, which allows a full deduction against tax just over a number of years. All this is doing is accelerating that so that you get the full benefit in the first year that you're sort of buying this sort of plant and equipment, which is obviously a good benefit for businesses because cash flow is very important.
Yeah, and I guess the other point to note is there's no inflationary erosion of the value of the investment, which under the previous regime there would have been. You're actually getting your 100% of your deduction up front, so you're getting a deduction for 100% of your real cost.
Yeah, that's right. So sort of previously, particularly with high inflation, this was kind of potentially a disincentive to invest, whereas now they've got the incentive to invest, knowing that they'll get that full deduction. It won't be eroded by inflation.
Yeah, and clearly, a business's tax profile will determine how beneficial this is in terms of will it have the tax capacity to absorb 100% of a capital spend in the year, or the profitability in the year to be able to claim the deduction and get the tax benefit.
Yeah, absolutely. So, depending on the size of the business and what their investment plans are, will depend whether they can take advantage of this. And certainly, hopefully, for large businesses, they will be able to. And for smaller businesses, perhaps they won't have the sort of the money to invest. But certainly for large businesses that have got the money there to make the investments, they can do this with confidence and get the tax savings.
Yeah. I guess the other thing is, I mean, obviously Hunt's keen to increase investment in the UK. This is obviously a key measure from his perspective in trying to achieve that. I guess a point to note is this will need to be in conjunction with other measures, I think, to really increase investment into the UK. I don't think it's in its own right a silver bullet. I think there'll need to be other things as well to encourage people to make investment into the UK marketplace.
Yeah, that's true. And I think certainly, obviously, we've had the sort of the recent change earlier in the year to increase corporation tax rates from 19% to 25%. So in some ways, this is just kind of offsetting that. But it is incentivizing businesses to invest. And I think that's the right way to sort of get economic growth and improve productivity in the economy.
Absolutely. I think fundamentally it's a positive measure. And as I say, I think it's good that both key parties are in support. And as I say, it's going to give that certainty and that confidence that business needs to make those investment decisions.
It does, yes. Can I ask you a question? I know that one of the changes or one of the announcements regarding the Pillar 2 rules and the top-up tax. Do you want to sort of comment on that?
Yeah, so obviously the UK government's been at the sort of forefront in implementing, or in terms of the timing of implementing the BEPS, the OECD BEPS Pillar 2 rules. So they come into effect for accounting periods ending after 31st December this year, so 1 January. So they're right upon us. So the draft legislation came out a year or so ago. It's been tweaked since. The announcement this time round was the introduction of the undertaxed payments rule, which is essentially restricting a deduction for a payment that's going off to a low tax jurisdiction where they haven't adopted the rules. So that's coming into effect after 31st December next year. So we've got a year's grace period before that has an impact, and it actually replaces the ORIP rules, which is the offshore receipt of intellectual property rules. So those rules are no longer required because of the undertaxed payment rule being introduced. So that legislation is being repealed. But I guess in terms of Pillar 2 generally, I think it just highlights the fact that this is a real issue. Companies really need to be thinking about it now in the context of certainly companies with December year ends this year need to be thinking about it in the context of what sort of provision and notes in the accounts they need to make about its potential impact. So they need to be doing impact assessments now in preparation for its introduction. So it really is a live issue that companies need to be focusing on. And I know from fact that some companies, sort of mid-tier multinationals, if you like, haven't started to think about it yet. So time is running out. It's a real live issue.
Okay, thanks. And is there anything else from this autumn statement that affecting large businesses, large companies that you think is worth commenting on?
I mean, I think that there's some sort of sector-based stuff. So there was quite a lot around the energy industry, and in particular, I think there's some consultation around the Oil and Gas Act. There's a separate piece of legislation that covers that particular industry, and I think they're looking to make some significant changes there. And obviously R&D, research and development tax credits is obviously a major announcement in connection with the merging of the two schemes, and the definition of subcontractor costs, etc. So I think we've got our colleagues doing a separate session on R&D, but that's obviously a key issue that's going to impact many businesses.
Absolutely, yeah. No, I think the R&D changes are simplifying things for large businesses and streamlining it into one system. And as you said, I think there's been a bit of tinkering as well with some of the rules, which our colleagues will talk about separately.
Okay, so I think in the main it would seem that I think if you're a large multinational business, and if you're a large business, then the fully expensing is probably going to have more impact on you than the smaller end of the business scale. And certainly as far as multinationals are concerned, Pillar 2 is a real issue that we need our clients to get their heads around. So interesting times.
Yeah, some opportunities and as well as some challenges for the future.
Absolutely.
If you've got any queries on any of the topics we've covered today on the corporate tax changes from the autumn statement, then do get in touch with your local MHA contact.
And for any further insights into the autumn statement, please visit the MHA Hub.